Investors have enjoyed a nice bull market for the last 12 months, but the tide certainly seems to have changed in just the last few trading days. Many woke up to find hashtag Black Monday trending on social media. Sharp drops in the global markets overnight on Sunday caused many market watchers to anticipate a similar correction in the U.S. markets and tie Monday back to the infamous Black Monday of October 19th, 1987, when the Dow lost almost 23% in a single day. Despite gloomy prognosis, as of recording, it seems highly unlikely we are going to experience a Black Monday like we did in 1987, with the markets currently only down about 2.5%. But no doubt, recent economic news has investors skittish. It started last week with several weak economic reports. Intel announced a large layoff was coming by the end of the year. The new jobs numbers greatly underperformed analyst expectations, and the unemployment rate ticked up to 4.3%. In addition to fears of a U.S. recession, changes in the Japanese yen, their currency, are somewhat to blame. If ever there was an example of global markets, the rippling impact of the rise of the yen is a lesson for investors and a reminder that our economies and our markets are forever linked. Some investors have been using Japan's low interest rate environment to borrow money and reinvest in dollars, creating some form of arbitrage. This can get complicated quickly, so I won't get into the details, but suffice it to say, what happens with other countries' currencies and their stock markets will inevitably impact the U.S. stock market. Countries like Japan and Australia are a full 12 hours ahead of the U.S. That gives us, our news outlets, and yes, social media, somewhat of a crystal ball when it comes to our stock markets. Significant corrections in other countries' markets while we sleep is what led to those scary headlines you woke up to this morning. We are no doubt in a time of increased volatility. The stock market does not like uncertainty. Signs are increasing that a U.S. recession is more possible than it was before. There is increased geopolitical unrest in the Middle East and an unprecedented presidential election here at home. And to top it all off, August and September haven't historically been good months for the stock market anyway. Given our fantastic bull market of the last 12 months, one should not be surprised that some correction in the market is warranted. In some ways, this is a very natural market swing given moves by investors anticipating interest rate cuts from the Federal Reserve. As always, investors tend to be better off if they ignore the noise and stick with their long-term investing strategy. That's it for this week. This is Jeannie, the 401k lady.